With the 2024 housing market just around the corner, all eyes are on Texas. Will prices continue their steep rise?
Absolutely. We're witnessing shifts that could redefine homeownership dynamics across the country.
In today's episode, we'll summarize the top real estate market videos from channel experts to discuss key insights and trends. Welcome to Financial Insights in Minutes, your go-to source for all critical financial updates.
Today, we will dive into pressing issues within the housing market that you can't afford to miss. Stick with us for in-depth analyses from leaders in the industry.
Let's get started with a look at the latest video summaries. Let's dive right in. Today we're exploring the tumultuous waters of Florida's condo market. Prices are plummeting, and with HOA fees skyrocketing, what does the future hold for homeowners?
Here's the full report. Approximately 40% price reductions are hitting distressed listings. This situation spells disaster for many owners, and we're just at the tip of the iceberg.
So what's the core issue here? What major event is influencing the decline?
The thesis centers around drastic price drops alongside rising HOA fees. Many owners are now forced to sell before an impending collapse predicted for 2025, leading to a chaotic market.
Let's navigate the key points. First up, those staggering price cuts.
Exactly. Owners are cutting prices dramatically, up to 40% in some areas. Just take that condo in St. Petersburg, which was slashed by $475,000. It's a clear signal of desperation in the market.
Now, what about those HOA fees?
They're soaring. With some fees jumping to over $2,000 a month, owners now grapple with a staggering annual fee total that could rival their purchase price.
Let's shed light on absentee ownership. What's the deal there?
It's alarming. Up to 50% of condos are second or vacation homes. This shadow inventory is why the market could see an influx of listings amid HOA hikes.
And what's next for the market?
Experts predict a continuous downward trend, especially as those mandatory assessments due in 2025 loom larger. The potential for a protracted market crash is very real.
Now, let's peek into the crystal ball. What does the future look like?
Forecasts indicate condos could lose up to 50% of their value. The perfect storm of price reductions and rising fees has set the stage for a major market correction.
And what impact will all this have on inventory?
Inventory levels are expected to soar. With so many desperate sellers, the market could see an oversupply that exacerbates price declines.
So to wrap things up, what's the takeaway?
The Florida condo market is on shaky ground. A perfect storm of rising fees and falling prices could lead to a collapse within the next few years. Smart buyers should tread carefully.
As we conclude this segment, what do you think? Is this a good time to buy or sell?
I want to hear from you. Share your thoughts in the comments, weigh in on this condo crisis, and let's navigate these waters together.
Let's dive right into today's hot topic, the job market collapse and massive AI layoffs. It's a turbulent time, and who better to help navigate these waters than economic guru Mitch Wexler?
That's right. Today's discussion centers on alarming trends in the job market as AI reshapes the workforce and exacerbates layoffs, all under the watchful eyes of the Fed's monetary policies.
Mitch, what's the essence of the matter? What's the core thesis at play here?
The big picture is that while the Fed has momentarily averted a depression, the advent of AI is causing a seismic shift. Streamlined operations are leading to mass layoffs, and the labor market is precariously hanging by a thread.
Let's break down the staggering stats on layoffs.
Absolutely. Companies are cutting jobs as they pivot towards AI, with firms like Dell reducing their workforce significantly. This trend shows no signs of slowing down.
What about the Fed's impact on this situation?
The Fed's policies create volatility, not stability. It's like patching a sinking ship with duct tape. The truth remains that these layoffs are tied directly to fiscal policies that favor corporations over consumers.
What do we make of the market's contradictory signals?
It's classic market behavior, a pump and dump. While numbers look favorable on paper, they mask the chaos brewing under the surface, evident from the layoffs.
Let's not forget consumers. How are they faring amid all this?
Consumers are caught in the crossfire, juggling debt and economic uncertainty. The layoffs make it impossible for many to maintain their previous spending levels.
What does the future hold for the job market?
Mitch believes the domino effect is just starting. We'll see more layoffs and possibly a significant downturn unless something changes soon.
Let's talk about predictions. What does Mitch foresee?
He anticipates that job losses will not only continue but may peak in the next few quarters, spilling into other sectors like retail and services.
And what about the markets?
With rising job losses, a market correction seems likely, especially as investors react to declining revenues and job insecurity.
As we near our conclusion, what's the main takeaway?
The surge in AI layoffs is a stark reminder that we must prepare for uncertain times. Keeping cautious and informed is the best course of action.
What should viewers do next, in your opinion?
Harness knowledge from this discussion. Start budgeting, seek new opportunities, and adapt to the shifting market dynamics.
We'd love to hear your thoughts. Where do you see the job market headed?
Drop your predictions in the comments. Your insights help enrich the conversation as we navigate these challenging times.
Time to navigate through these waters. Zillow just downgraded their housing market forecast. What's the buzz around home sales and values over the next year?
Let's get straight to the facts. Zillow revealed a more pessimistic view of the housing market, suggesting a slowdown that's raising eyebrows across the industry.
So, what's the core takeaway from this report?
The main thesis is that Zillow's latest forecast reflects lower expectations for home appreciation, projecting just a 1.8% increase for 2024, down from the previous 2%.
All right, let's break down those key points. What does Zillow predict for home sales?
Zillow anticipates 4.1 million sales, which would be the lowest since 1995. They claim it reflects only a slight increase from last year's dismal sales figures.
And how do these numbers stack up historically?
When looking at the historical data, if we hit just 4 million sales, it marks a staggering 1 million fewer than the average since 1989.
Now, what about the dynamics between inventory and sales?
Exactly. New listings are rising by 3%, while pending sales have dropped almost 7%. It's a real tug-of-war in the market right now.
What predictions do they have about home values?
Zillow forecasts a 2% increase on average nationwide, but watch out. Areas like Austin might experience decreases up to 0.1%.
Any speculation on how changing rates might impact the market?
Yes, a drop in rates could increase buyer demand significantly, making the existing supply crunch even more pronounced.
To sum it all up, what are the key takeaways?
We're seeing a tighter housing market, with forecasts leaning towards caution and uncertainty in consumer confidence. Don't miss what's coming next.
And for our viewers, how do you think these forecasts will play out? Less than 4 million sales by year-end.
Leave your thoughts below. We want to know where you think the market is headed.
Time to navigate the currents of today's discussion. Today's hot topic is the California real estate market. Is it wobbling, or is it just a rough wave? Let's dive right in.
Indeed, there's a lot to unpack, from home sales to inventory levels. Melody's been tracking more than 80 cities and seeks local intel from viewers. It's a community effort.
What's the core thesis here? What should we be most concerned about?
The central thesis is that California's real estate market is showing signs of wobbling. Year-over-year sales have increased, yet the overarching concerns about unemployment and inventory levels indicate potential instability.
What about the trends in home sales?
In July, home sales in California increased by 4.21%, a break from the norm. Still, sales levels remain worrisomely low compared to 2008. It's like sailing when the tide goes out.
How is inventory playing into all of this?
Statewide, inventory is up almost 29%. Meanwhile, the Midwest is experiencing a different pattern. Inventory is slowing, but California is still seeing a backlog.
And what's happening with median listing prices?
Interestingly, median listing prices are nearing June 2022 peaks, but actual sales prices are feeling the downward pressure. Demand just isn't keeping up.
What about predictions for the market?
It looks like if inventory remains elevated, we might see further falling prices. Plus, rising layoffs could further dampen sales. The horizon isn't looking too sunny.
In summary, what are the critical takeaways here?
California's real estate market is wobbling. While there are momentary spikes in sales, underlying issues such as high inventory and rising employment concerns are gathering like storm clouds, signaling volatility ahead.
What do you think about the current situation? Will California stabilize or continue to wobble? Let us know your thoughts in the comments below. Time to navigate the currents of today's discussion on a pressing issue: housing affordability. It's at a near 40-year low, affecting everyone from investors to families looking for a home.
Absolutely. Today, we're diving into government policies that could potentially impact housing affordability, all while keeping a level head amid the political noise.
So what's at the heart of our housing crisis? Why is affordability plummeting?
The core issue is a mismatch between housing supply and demand, exacerbated by policies and housing market disruptions from the pandemic and rising mortgage rates.
Okay, let's break down the toughest part, the current state of housing.
Right. With affordability at a 40-year low and notable price hikes, the stakes are high for everyone involved.
Next up, regulatory reforms. What's the deal here?
To tackle affordability, we need to reform land use and zoning laws, allowing a wider variety of housing types, especially multifamily options.
Now let's talk candidates. What's Harris proposing?
She's advocating for 3 million new homes, boosting low-income tax credits, and funding to rework zoning laws. But will it stick?
And what's Trump's perspective?
He's focused on curbing inflation and opening federal land for new constructions, but where's the meat?
Finally, let's tackle the economic implications. How does affordable housing affect economic mobility?
More affordable housing leads to labor mobility, but skyrocketing prices are blocking the path for future generations to benefit from homeownership.
What does the crystal ball say about future policies?
Easing regulations may unlock more affordable units, yet the high demand could keep prices elevated. We're in a bind.
So, what about market reactions with these changing policies?
If supply increases, current property values might take a hit, reshaping investment strategies down the line.
Wrapping it all up, the need for balanced intervention is clear.
Absolutely. We need solutions that will last, benefiting both investors and homeowners while increasing housing stock.
So what can we do moving forward to secure affordable housing for future generations?
Stay tuned, keep discussing these policies, and let us know your thoughts in the comments. Your voice matters in shaping the future.
Thank you for joining us today. We've discussed predictions and concerns from various experts discussing the state of the housing market.
Overall, specialists are painting a complicated picture of the future, showing that caution is essential now more than ever.
Stay informed and ready for the next updates as we follow these trends closely.
Be sure to share your thoughts below about how you see the housing market unfolding.
Thanks for watching Financial Insights in Minutes for August 30th, 2024. If you found this time-saving content useful and want to support the channel, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.